guys, we got this great clip from one of our long content videos. Don't forget to hit the subscribe button. Enjoy.
One of the objections I get from time to time, some people are really concerned with locking their money up for a 5 to 7 year period. However, what too many investors do is the moment the stock market drops, they panic. They panic and they sell at the bottom.
They pull out at the wrong time.
Exactly. So, with our funds, I mean, there's been, the fact that there's not a lot of liquidity, we don't have to sell anything for the next couple of years. We don't have any debt that matures in the next 2 or 3 years. So while there's a little bit of noise with interest rates and like this next couple months is not the ideal time to try to sell a property, but we don't have to sell anything. Whereas if you owned a real estate investment trust, number one, even though it's supposed to be tax efficient, it's actually the worst tax efficiency for high net worth people because they end up paying 29.6% on dividends. Whereas the private deals, you're actually getting deferred cash flow with to completely tax deferred cash flow because you show a loss on paper while you're getting that annual return, that whether it's 8% or 6%. So it's a lot of people panic and sell REITs. REITs had a bad year last year, even though our properties and largely the syndicated real estate deals are just plugging along.
Yeah, and so that leads me into my next question. And which markets are you kind of highly anticipating finding some bargains in? And where will you focus your acquisitions maybe throughout the next year or 18 months?
Yeah, so it's still a lot of the same. I mean, you mentioned the Southeast. Yeah, we're primarily in the Southeastern U.S. We're also in a number of Sunbelt markets. We're in Dallas, Houston, Phoenix, and Vegas. And I think that as long as you're in an area with high population growth, we're focusing on areas that still have population growth. And we're not at the high end of the market. You see a lot of headlines right now about, prices dropping, rents dropping, and in select markets it's happening. But if you look at the deeper details, there was just a report that Phoenix rents were down 5%. However, when you look at the fine print, rents were down 12%, give or take, on the high end market. And rents were actually still up 3% on the workforce housing market, that, middle class, working class, workforce housing, that, you call it whatever you call it. And that's the market we like to be in, where rents are somewhere between, $800 and $2,000 a month. We're not typically going for the high end of the market. So we'll continue to look at those markets. And what we're seeing is there have been some price adjustments. There's actually less inventory and less sellers right now because it's not the opportune time to sell into a slightly higher interest rate environment. But for those that do have to sell, there are some opportunities and prices have come down, a few percent or more. And we still look for deals that work in any market. That value add scenario where you have a 1980s vintage apartment where, the owner, it's fully occupied, a nice enough building, but still has Formica countertops. They have basic carpet down. The kitchens and baths are from the 80s. You take that unit in a market where there's a shortage of housing and you cannot build workforce housing. If you're building new construction, you're building higher end in general, unless you've got massive government grants or subsidies. So we take those buildings that are, nice, but underappreciated and dated, and renovate, and all of a sudden it's the nicest Class B unit you can find. There's a waiting list of people that'll spend $1,500 a month for an apartment that used to be $1,100 a month because it's very nice. Then we put in things like dog parks, things like barbecue grills, repave the building, change the signage. And if you do that, it doesn't matter what market, it doesn't matter if rates go up another point or 2 points. At the end of the day, you're creating so much value that it's going to far surpass any economic headwinds there may be over the next year or two. And even if there's a recession, people are going to downgrade from their Class C, high-end Class A apartments to the nicest kind of Class B simple apartment they can find.
I love your investment strategy. I love value add. That's what we like to do, value add, highest and best use type combination stuff. You answered a question for me. You didn't even realize I had the question, but I have rental properties in the States as well, in Orlando, Florida, and I'm hearing about these rental markets coming down, but I haven't experienced it at all. And literally for the last month and a half, I've been seeing this doom and gloom stuff about rents coming down. Rents are coming down, and I'm going, that's not what's happening with me. I mean, we're taking a house where a guy moved out. He was at $1,500 a month, and we're going to raise rents to $2,000 a month after some renovation. Just like you said, we're going to make it the nicest house in the neighborhood, but rents are through the roof for us. And I was actually scratching my head a little bit for the last month and a half, just wondering, is it going to catch up to me all of a sudden, and I'm going to be completely wrong about this? So it's an interesting thing to see, and that is sort of what we've seen in Puerto Rico, is that Puerto Rico has held strong in the working class neighborhoods. But if you bought the $45 million home over in Dorado, you're probably not feeling real good about your decision, right? Like, if you bought that, you don't have to sell, you've got no pressure, everything's fine. But that product has kind of just fallen off a cliff. So
Hey guys, thanks for watching that. Subscribe to our channel, watch this next, and then also check out the pinned content for more great content, guys. God bless.